Hello. For those of you who don't know me, I'm Freddy Colquhoun and I'm an investment director here at JM Fin. I've worked with Hugo Bedford on client portfolios since 2003 and I'm also the chair of the JM Fin stock selection meeting, and we meet on a monthly basis. The current pandemic is changing the global economy and consumer behaviour at such a rapid pace as we all have to adapt to a new way of living with the virus in our community. This, coupled with the extraordinary technological changes seen over the last 10 years, has led to a thorough re-examination of the investment landscape, as some of these trends that were seen before the crisis emerged will ultimately be reinforced by it and will lead us as we come out of the current global recession into a new economy. We've been evolving portfolios over the last few years to gain exposure to some of these trends and have been moving away from some of the more traditional sectors that used to dominate client portfolios. Some of these old economy sectors, such as oil and gas and banking, are deemed to be too highly indebted or too heavily regulated and now offer lower shareholder returns going forward, especially in light of their recent dividend cuts that we have seen in the first half of this year. We believe that there's also a real threat, especially within the oil and gas sector, that investors may well be left with some stranded assets as we see the continued energy evolution moving away from the use of fossil fuels. Disruptive technology is a theme by itself, but it actually crosses each and every sector in the market today. Those companies that don't adapt quickly enough to the changing ways that we are consuming and transacting will not succeed, in our opinion. Digitalization of services provided, the capture of data provided by us as consumers, and the analytics to use this data enable online delivery companies, for example, to provide us with the service that we now expect today. We have introduced direct equities and funds onto client portfolios over the last few years that provide direct exposure to some of these long-term themes that we've identified. These include logistics companies that enable efficient online deliveries, healthcare, both from a human and from a livestock perspective, nutrition, cloud computing, online payment providers, and artificial intelligence and automation, and also environmentally friendly and alternative sources of energy. The key criteria for us when we analyse companies is to ensure that the company can perform well through an entire economic cycle and emerge stronger from crises as they come along, as we see today. A company that is a price setter rather than a price taker is preferable to us, has high barriers to entry, has low levels of debt on its balance sheet, and also fits within one of the growth themes that I've mentioned on this video. These are the types of companies we're looking out for today, and hopefully we can include more of them on portfolios going forward.